The Tesla 3-for-1 stock split has been announced. Date. Is it the right time to purchase? Welcome to the Stock Room YouTube channel. In today's video, I will share with you everything you need to know about Tesla stock split. So make sure you watch the video until the end. Do not forget to like the video, subscribe, and comment what do you expect about Tesla stocks. With no more excuses, let's get started. Many people who follow Tesla are aware that the company's stock has been on a major roll recently. The price of the shares has increased by nearly 30% in just the past month. This trend continued throughout the morning trading session on Monday, with the stock moving 1.4% higher as of 10:55 a.m. Eastern Time. After passing the 1 million vehicle mark in Shanghai, Tesla CEO Elon Musk announced over the weekend on Twitter that the company has now manufactured more than 3 million vehicles. This comes after the plant in Shanghai surpassed the milestone of producing 1 million vehicles. Because of this fact, investors are able to see through some of the noise that is associated with Musk. The recent increase in the stock price can be attributed to a number of different factors. The ongoing drama between Twitter and CEO Elon Musk is beginning to reveal some additional details. The recent sale of nearly $7 billion in Tesla shares related to the deal provided investors with some information on how it might affect Tesla and his holdings, despite the fact that investors still do not know if Musk will be forced in court to follow through with his bid for the social media company. The sale gave investors some information on how it might affect Tesla and his holdings. Is now the right time to invest in Tesla after their stock split? On August 4th, shareholders of Tesla gave their approval to plans for a 3-for-1 stock split. On August 25th, trading of Tesla stock will commence at the newly split price, and the total number of outstanding shares will increase to 4 billion. It is anticipated that the demand for Tesla shares will increase as a result of the stock split. In July, Tesla reported earnings for the second quarter that were better than expected. The following day, shares increased by 10%. They have made even more progress upwards in advance of the expected news regarding the Tesla stock split. After failing to break above the 50-day moving average since the beginning of May, Tesla stock was finally able to do so on July 8th. It is currently attempting to get above the 200-day moving average, but it is meeting resistance there. The share price is still quite a ways off from its previous highs. The 200-day moving average is providing Tesla stock with some opposition. Following the disclosure that Elon Musk had sold nearly 8 million shares in the preceding days, the price of the company's stock increased by more than 2% on August 10th. The proceeds from those sales provided Elon Musk with approximately $6.9 billion in advance of an anticipated legal battle regarding his contentious agreement to purchase Twitter. The price of Tesla stock is not attractive enough right now to warrant a purchase. According to the chart analysis provided by MarketSmith, share prices are currently in a long consolidation on a daily chart. The stock needs more time, but aggressive traders may find an alternative entry in a trading range that is relatively tight around the current levels. What exactly is a stock split, though? A stock split occurs when an existing share of a company's stock is divided into multiple new shares by the company. If a company decides to split its shares in a ratio of 2-for-1, the share price will drop by 50% while the total number of outstanding shares will increase by 100%. When the price of a company's shares has increased significantly, the company will typically split their shares. The stock's price is reduced as a result of the split, which makes it more appealing to a greater number of potential purchasers. Potential shareholders are now within the price range of some investors who were unable to purchase them in the past. However, the current value of the company is not affected in any way by the split in any way. Reverse stock splits are one strategy that can be utilized to bring down the total number of shares that are currently in circulation. Companies that are experiencing financial difficulties will frequently announce a reverse stock split in order to maintain their current share price and prevent themselves from being delisted. A company that is currently trading at $5 per share has the ability to initiate a 1-for-2 reverse split, which will result in a share price of $10. If there were 100 million outstanding shares of the company's stock, that number would fall to 50 million shares. How will a stock split affect the value of my investment? After a stock split, the monetary value of your holdings will remain the same amount even though the number of shares you own has decreased. You'll simply end up with a larger shareholding. The same concept applies even if you only own a fraction of a company's total shares. If you own half of a share of a company and there is a stock split where 2 shares become 1, the value of your holdings will increase by 100%. Therefore, you would completely own 1 share of that company's stock. What happens if you own a stock that is entitled to receive dividends? In most cases, the amount of dividends paid out after a stock split will be decreased proportionally per share to account for the increased number of shares that are currently in circulation. The total amount of dividend payments will not be altered as a result of this. What kind of impact do splits have on options? Consider the following scenario. You have a call option on a stock, and then it is announced that the stock will be split. What steps are taken after this? In the event that you are the holder of an options contract for a stock that is going through a split, your contract will be recalculated so that it is unaffected by the split. The total value will remain the same, despite the fact that the new price and number of shares will be displayed. This is what is meant by the phrase being made whole. By the way, in light of this, an option contract that previously covered 100 shares and had a strike price of $100 per share would now cover 200 shares and have a strike price of $50 per share in the context of our 2-for-1 split example. The splitting of stocks and their performance. According to data provided by Dow Jones, during the period of 2012 through 2021, the average percentage gain for stocks included in the S&P 500 in the year following a stock split was approximately 12%. According to the same set of figures, the frequency of stock splits among companies included in the S&P 500 index has increased significantly over the past few years, reaching levels not seen in nearly a decade. In the past, market peaks have been accompanied by excessive stock splitting, particularly in the year 2000. When technology stocks reached their peak. Take Qualcomm as an example. In May 1999, the company's stock was split 2-for-1. Following that, in December of 1999, the company announced a stock split of 4-for-1. After the news of the first stock split was released in 1999, the price of QCOM shares increased by more than 840%. The price of a share of stock in April of 1999 was 21, and on the first trading day of the year 2000, it reached an all-time high of 200. Are splits ever a good indicator to sell? The majority of investors have a bullish attitude towards stock splits. However, there are times when a rapid succession of stock splits may be an indication that it is time to sell. Investors who are willing to pay a premium for quality are typically drawn to more expensive stock options. Although this might reduce the number of people who are interested in making a purchase, it has a tendency to increase the number of smart money sponsors who are backing the stock. On the other hand, early stock splits are rarely a cause for concern. After initial stock splits, share prices can and very often do move higher, particularly when the splits take place at the beginning of a bull market. But complications arise when businesses carry out a series of significant stock splits within a span of 1 to 2 years, such as a 2-for-1 and a 3-for-1. For example, those who have an interest in the Tesla stock split should be aware that in August of 2020, shareholders approved a 5-to-1 split. The nutshell for shareholders and investors. Investors may be tempted to participate in a stock split because it gives them the opportunity to purchase a stock that was previously more expensive at a price that is significantly lower. However, investors should never buy shares of a company simply because the stock has been split. Make sure you do your homework, check the stock charts to determine the best time to buy, and concentrate on businesses that have strong fundamentals and are among the best price performers in their industry group.